Folks, my name is Roger Scott, and this is the Midweek Roundtable, and I have my usual co-conspirator and my co-host and co-troublemaker, Jeff Zananiri here. Jeff, how are you doing today?
I'm excellent, Roger. How are you?
I'm doing great. Welcome to the New Year's. I believe this is our, correct me if I'm wrong, but I believe this is our first session together in the New Year's.
No, I think last week.
Second session. Okay. So,
Yeah.
but this is, I always look at, and you'll probably agree, I never look at the first trading week of the year as
Right.
a week. I always wait for this. To me, this is the first week of the of the year in terms of trading.
Yeah.
Because how hedge funds they'd like to take off, and it's fragmented, volume is low, and now things are coming back.
There's been some extraordinary moves though in the short amount of time that we've had so far in 2021.
It has been interesting. So tell me what's on your mind? What are you looking at? What's your game plan? We got a lot to talk about here.
Yeah, so I'm seeing and we talked about this with James West on Monday. I am seeing a little bit of fatigue in basically the stocks that have been driving the bull market for the last 5 years. I'm not even talking about the last 6 months. I'm talking about these FANG stocks that became trillion-dollar companies over the last 5. Those have been the catalyst for the bull move in equities. And those stocks are starting to look a little bit tired to me, which is kind of like a warning sign. We're seeing percolation in other places, oil, clean energy. Oddly enough, oil and clean energy are both running at the same time. General Motors had a big move yesterday, so automakers are starting to catch a little bit of a bit. Banks have been on fire. The Russell, which you've been like all over, like, flies on you know what, have been outperforming all the indexes. So a lot of good stuff, a lot of stuff that we've anticipated has been happening, but I'm concerned with this big exhaustion in the mega cap techs that I'm seeing, because I don't see a situation where you could have like a real rout come in those stocks and have the market stay okay. And by okay, I mean like, for a few months. I'm not talking about for like the next 10 years.
And I just wanted to add, to that. I'm seeing very similar, and I started getting a little concerned, which is, and this is a little puzzling, because right now, it just shows you the difference between the quality of different panics. And I'll tell you where I'm headed here. If you recall, when we had the first spike in COVID around February, March, that critical period, maybe even April,
yeah,
when the toilet paper, there was no toilet paper, where people were just going haywire, where the VIX was going, I think, to, don't quote me on the number, but it was like 80 or so. It was just insane.
Yeah, it was nuts. You're right.
An insanity was going on.
Yeah.
If you think about it right now, I mean, the number of COVID cases right now and all the negative that's happening is far, far worse than that period. But we have toilet paper in the stores. And, if you recall, a lot of people thought that it was that we got it as an import from China, and China was doing really bad before us. So people here were kind of thinking that if China's doing bad, then one of the things they're not going to get is toilet paper. Then they realized they get toilet paper here in America, and most of it is made here.
Right.
But here's where I'm going with this. I started looking I started looking the day before at stocks that were making all-time highs, or stocks that were really, really going crazy during that period. For example, and you'll see where I'm going with this. Campbell Soup, Hormel,
Right.
Spam,
Yeah.
Kellogg's, General Mills.
Yeah.
I know that you know where I'm going here, okay?
Yeah.
The things that people need to survive, the things that people don't.
Yeah.
The next consumer staples, the next thing next to
Yeah.
toilet paper, pretty much.
Right.
Guess where each and every one of those stocks is right now? In the toilet. Breaking below the 200-day moving average or sitting on it right now. Along with Zoom. And how about this? Remember how bullish I was, not towards the end of the year, but towards the middle of the year? Remember how bullish I was on the cloud? Everything cloud, cloud?
Yeah, cloud.
Not right now. So what it's telling me is, and this is a little puzzling, even to someone like me who's been around the block a few times.
Right.
Even though things are really bad, even though we're heading for a really negative period, the sentiment is clearly already the market is assimilating a COVID-free environment, or going back to normal environment. And I don't know if that's a reality though or not. And that's kind of the topic that I wanted to get into with you based on everything I'm seeing.
Well, this is something we've been about forever, that COVID was not a one-off event, and it wasn't a binary event either. There wasn't like COVID is complete destruction of the economy and death. We never were there. So we were able to go long a lot of great stocks in that panic. And we've never been on the side of like this complete solution, COVID-free life. Everything goes back to normal circa 2019. So somewhere in the middle is reality. The problem is that I was reading that like 60% of people that have started adopting remote work are really liking remote work and feeling more productive. That was a poll that I read, that 60% of people that have gone home to work actually feel that they produce more working from their house than working from an office. So how do you tell those people, and a lot of them probably have proof of that too, how do you tell those people like you have to come back even though these people are crushing it from their house?
I'm surprised that it's 60%. If you told me 70%, I would have probably believed you too. I mean, what I'm saying, I believe
it wasn't
this.
even about preference. I'm not talking about preference. I'm talking about performance.
Gotcha.
They felt they were performing better working remotely, not what they preferred.
Gotcha.
So that to me is a big thing. It's a big tell. Like the genie, you're not going to put I could use any one of these cliches to get to where you know where I'm going to get to. You're not going to be able to rewind that back. That's like, all of a sudden I figured out my bicycle was just as good as a horse, and it wasn't taking a poop all over the street. And, and then a car was better than riding a bike. And, you don't progress.
We're not going to go to the BlackBerry once you have a smartphone. And once you have LASIK, you're not. Yeah. I mean, no.
It's over. But yeah. So we have this thing, right? So COVID is becoming less and less of an issue in terms of the stock market, right? It's become, like you said, it's becoming less of an issue from the stock market. So what is an issue to the stock market right now? How the Democrats really transition to power, the incentives for companies like green energy companies to do amazing things. The green energy New Deal is obviously propelled some of these stocks. I don't know if you look at Fuel Cell and Plug, and some of these names are up like 90% in 2 weeks.
I have, as a matter of fact. I have Plug right here behind me. It's up 3.68% today, and it was up like 15-20% yesterday.
20% yesterday. Yeah.
Crazy, right? Crazy.
Right. Yeah. So the market's transitioned from worrying about COVID to what the new Democrat environment's going to be. But I'm really paying attention to the dollar, which looks like it's bottomed out a little bit, and rates, 10-year rates, because for a little while, the higher rates are kind of a good thing for people like banks, et cetera. But there's a tipping point where the rates get ahead of where the actual economy is. And that is not good. That is not good. And the Fed, I think at that point, the Fed will come in and do a little bit of yield, not to get too nerdy, but they'll do a little bit of yield curve control. And what that means is short dated maturity, T-bills and treasuries, they're going to be buyers of those so that they can keep rates low for short-term duration. Because if short-term duration goes too high, what that means is people that have to borrow money overnight, for instance, like a corporate treasury or something, they get it stuck to them. Like that's a painful thing. Like suddenly all of a sudden, just to process your payroll and to keep your operations going costs significantly higher. So that could be a bad thing. That's something I'm paying close attention to. For the economic rebound. And for a lot of tech stocks and high growth stocks are highly levered. They borrow a lot of money just to do their operations because frankly, they're anticipating on the future growth of the business, not the here and now.
Another concern I have for you, I don't know if you're familiar with the XME. It's a metal ETF. It's hovering right around
I know it.
Multi-year highs right now. Ticker symbol XME. Spider S&P Metal and Mining.
Mm-hmm.
And it has exotic metals, it has precious metals, it has copper, it has everything in it. It's looking good. What are you, in light of everything you've said with the interest rate policies and with Biden administration, what is your, and I know I try to talk about this with you every couple of weeks because we have a lot of members who are still very much interested in metals, both precious metals and non-precious metals. So I wanted to get your 5 cents on that. I'm becoming increasingly bullish again on. So let me hear what you have to say.
I think that, metals, excuse me, metals like copper, which are highly useful, economic. This is the thing. We're speculating right now that there's going to be this huge political bill that's going to spend a lot of money, but that the spending part isn't the part that's important to the stock market. The part that's important to the stock market is that it's going to create a lot of jobs and a lot of construction around it. And you've spoken about this. And I don't know how you could be against that. Like, that's going to happen. And it's almost necessary that it happens to get people working in this country again. So you can't be bearish. I'm not as bullish. I'm more bullish on gold than I am on copper and iron ore. But I'm certainly, for the long term, very bullish. But I'm being a little bit careful because I think that there's going to be a bumpy ride. I think there's going to be a bumpy ride in all assets over the next, within the next 60 days. I think there's going to be a harsh sell-off in things priced on exchanges.
I couldn't agree with you more. Now, when we started this conversation, you mentioned large caps, FANG stocks. Do you believe that this is kind of like a multi-layered question. Do you believe that it is the market's way of anticipating and pricing in the fact that these companies are in a higher probability of having a breakup, or do you think it's the valuations and the tax structure, or do you think it's a combination of all that's causing them to that's causing them to be a little stretched out right now?
So what I always like to say for long-term investing, and I'm a trader. So let me preface this by saying I'm a trader. I'm much better at trading than I am at investing, but I'm okay at investing too. But I find that people are either really excellent at one or excellent at the other. Hardly ever both, but you can be good and excellent. So I'd say I'm a good investor, but I'm a much better trader. But when I always look at investing and like long-term things, I try to use my trader cap and say, what's the biggest risk to my thesis? So when you're trading, you should always ask yourself, what's my blind spot? What's my maximum pain? And what's going to push me over that threshold where I could get that hit, where I could take that hit in the next month or so that I think this trade should work. And so from an investing standpoint, it becomes a lot more existential. What does that mean? It means that you have to philosophically say to yourself, will this business be around in 2030? And I think if you ask yourself that about companies like Facebook and Twitter, the possibility is that they're not. The possibility is that society turns on them, that the political regimes find them way too intrusive, just nefarious in all of their effects. And so if you're investing for the long term in companies that could potentially not be around, that is something you have to price in at a certain point. And I don't think it's fully been priced into those stocks. Now, do I think cloud computing is going to be around? Of course. Like, you can't have a business. Do I think companies are going to sell stuff electronically like Amazon? Absolutely. But I think with some of the social media type of players, et cetera, people that are right now really under scrutiny, I think that they have an existential crisis. I think that a company like Apple doesn't have the same type of existential risk, but I think they do have the idea that they might be broken up into separate parts because of the fact that they're manipulating what can and can't get sold in their Apple store, et cetera. So I could foresee a situation where you have an Apple like hardware company that sells, the watches and new iPhones and laptops, and then you have a separate company that is like selling you apps.
Absolutely. And I couldn't agree with you more, especially with what we're seeing in light with China. I think that's going to be a big impact too, because of all the supplies for Apple, and a lot of these chips are made in China. So I think that's going to be very, very interesting how Biden deals with that aspect of the economy. And She
You're a
deals
big
with,
semi guy. You know, Taiwan Semi is like
yeah,
they're, for people that don't know about these stocks, Taiwan Semiconductor is a company that builds chips for everybody. So
yeah.
people like, you have a chip, you need it in production, you want to get it out there quickly and clean and done perfectly with high technology manufacturing capabilities. Taiwan Semi is the best company in the world at that. Right now, Taiwan is in a little bit of a pickle because China's starting to get aggressive with Taiwan, kind of in a similar fashion that they got aggressive with Hong Kong. So that's something to pay attention to.
Absolutely, absolutely. Let me ask you this: for the next few weeks to a month, what are you seeing as an upside? What are you seeing as the biggest potential, and what are you seeing as the biggest risks?
So,
If I had to put a crystal ball in front of you.
so we still, we're building towards that. In some stocks, we're starting to see that blow off top happening. We saw a blow off top in Bitcoin last week. And for people that don't know what a blow off top looks like, it's when everybody's so FOMO'd out that the thing's going to go on forever and that like you're going to be able to 10x your money in a few days, that they make a really bad decision and buy after something has moved parabolically. And when you see that in individual assets and then you start to see it in individual stocks, it's pretty much consistently been true that you're going to have a near-term top in the market too. So I'm starting to see blow-off tops. I saw blow-off top in Bitcoin. I think you're going to see blow-off top in Tesla. You're seeing a blow-off top in these clean energy names, which are awesome. They're going to keep going, but I think you might have to chill and wait for a little bit of a correction to get in them if you're not already long.
I couldn't agree with you more. I could not agree with you more. I think for those investors or traders who are patient right now, being cautious and being partly on the sidelines or partly defensive is a very good way to go. Let me ask you another question. Link trades. What are you seeing? If you can give me some idea, you don't have to give me specific trades, or maybe just give us the trades that you recently closed out, just to give people idea of what's on the horizon, what you're looking at in terms of sectors, maybe.
Yeah. So I recently just turned bearish on banks, on the banking sector. I think that got way too. I was long, remember, with you.
Yes.
That was one of my value sectors, and I rode it for a nice period of time. I caught about 80% of the move. And I love JP Morgan, which has gone up 35%. You know, a lot of these stocks have really done really well. You know, were good recommendations for our subscribers. But I've recently turned bearish on the financials simply because it's a case where interest rates rose like 15 basis points, which is still kind of a nothing burger. I think it's going to behoove the Fed to keep rates low. Like I said, they're going to come in and they're going to manipulate the curve. And the reality is that I think we're going to be in an economic malaise for a little while, no matter what. So I could see a little bit of a sell-off in the banks. Nothing too crazy. I don't think they're like going to have like a 50% like they did in March, but 15% wouldn't be crazy on XLF. I got a good story of a trade I just closed out that would have killed me if I stayed in one more day.
Yeah.
So we've been talking about AMD Intel as a pair.
Yeah. Oh yeah.
That I've
Yeah.
been in forever. I took it off yesterday.
Okay.
Yeah.
Didn't Intel get a new president? Sorry, go. I'll. Yeah, go ahead.
So Intel, like a week and a half ago, and I spoke about this on here, and it was making me a little nervous because that was my short component of the money link that we talk about. It was my bearish case, which has been perfect for a while. But like a week and a half ago, a pretty prominent hedge fund and a guy that I respect a lot, who's an activist, Daniel Loeb, was getting involved in Intel and recommending that they get new leadership and that they look at breaking up the pieces and selling off some assets. And typically when guys like that get in there, they win. They don't lose. And so, you know, big part of being a good trader is saying, okay, maybe the atmosphere has changed. Maybe the conditions for this trade are no longer the way they were. And so Intel had a little bit of run, but AMD was still outperforming like crazy because it's the better company as we are.
Sure. No
So
question.
I was taking no pain on the trade, but AMD had this big surge where it went from $90 to $97. I had subscribers last week freaking out when it was around 90. Intel was kind of like stuck around $49. And then AMD, you know, the new year happened, big tech they started going for the big winners again. I still love the semiconductor space, as you do as well, I think. And AMD went from $90 to $97. So maybe even 98 at one point. So I was like, okay, I think Intel could rip here and really rip because it's been like really outperformed. And I think AMD might be limited. And by limited, I mean like in the short term, I think 100 might be a cap because traders have like these psychological attachments to these big figures, like $100, $50, $1,000. I don't know why, but it's how we are as human beings. Like if you think of your house, you're like, my house is worth $1 million and people are fixated on $1 million. Like, do you really care if you sell it for 900 and
Right.
$90,000? I mean, like,
right.
right, 10,000 less.
Of course.
That alien is so important. So I thought it was a cap, and I got out of the trade. Long story short, I got out of the trade. Today, Intel is up like 10% because the CEO actually resigned, taking the activist guys' warning very seriously. And AMD is selling off. I don't know. I mean, we're filming this at the beginning, so I haven't really seen lately. But AMD was initially selling off on the news that Intel might get their crap together and be a challenge. But what I'm trying to say is this thing is hard. Even if you can find pairs, even if you can find money links, there is an aspect to timing trades where it behooves you to have the DNA that you and I have, the 50 years of combined experience in trading stocks in the market, to know that conditions are changing and to exit trades. That's the gist of it. The gist of it is like I got out just in time because my spidey sense was going off to lock in winner.
AMD's down about 3.5%, Intel's up about 8.5%.
Yeah, so I would have collectively been out 11, like almost 12%, just staying in that trade one more day.
Yeah. No, that's yeah. I mean, hey, you know what?
It's real talk.
No, that's very real. We closed our short yesterday for Intel as well, by the way.
Nice. And we don't even talk about these things. We do on these shows, but like, I don't like to mess with other people's process because there's like a bigger strategy and portfolio that's being managed. So unless something totally wild happens, then I maybe, and we've done it in the past when COVID was hitting and it was like extreme situations or an election night. But for the most part, I don't mess with other traders' processes because it's just one input, like in a big thing that they have going on. So I don't like it when, I don't take it personal either, but, just my thing.
Well, Jeff, the insight, I think and I think the dynamic between us gives people who are really interested for information and knowledge on trading, gives them a really good idea of kind of, like we talk about things not being binary, but trading is definitely not binary. It's not just buy here, sell. I mean, there's a lot of dynamic that goes into all of this. Before we conclude, I wanted to ask you, and you touched on this indirectly, but let me ask you directly, the long bond, the TLT, the 30-year.
TLT, yeah, bullish.
It's in the descent. The futures is in a descending triangle right now. It looks like it's breaking down from a long-term base. Do you think it has a lot more downside, or do you think it's going to pop? You think it's going to pop back? Yeah,
I think it's going to pop. I think and for this, so people that don't know the mechanisms, how they work. So bonds and their yields are inversely correlated. So rates go higher, the price of the bonds go lower. So the TLT owns bonds. So the TLT is going up when rates are going down. So in March, when we went from 2% 10-year treasuries to 50 basis point 10-year treasury, TLT did like a 30% move or something to that effect. Right now, it's down a few percent. We went from 90 basis points about to 1.15 basis points at the high the other day on the blue wave. And I think that's a pretty decent sized move. And I think it's limited. It'll be maybe like 120, 125 area for the 10-year time. And again, if the 10-year treasury goes up 100 basis points, this is a cool stat. 100 basis points, so 1%. So it goes from yielding 1.1% to 2.1%. The U.S. interest carrying cost goes up $250 billion in 1 year. So if it goes up 200 basis points, we're going to have a $550 billion extra money that we're going to have to pay just to service our debt. So It behooves the powers that be to keep it low because they're going to keep borrowing more money. Guess what? They're not going to decrease the national debt. They're going to
No,
increase it.
of
So
course.
I think there's a natural lid on that based on the fact that these guys will move hell and heaven to keep a lid on rates just so that we can keep paying our debt. It would be like being able to like artificially set your credit card APR to make it manageable on a monthly basis.
Right. Of course, which would be, yeah.
This would be awesome.
Yeah.
But you wouldn't choose higher for the most part.
And I also do want to add that the long bond, historically speaking, tends to be a very choppy market. It doesn't usually have a lot of fluid moves because interest rates don't move in a fluid cycle typically.
Look, here's reality, Roger. We've been in a maybe even longer than this. We've been in I think like a 12 or since the 08, 09, we've been in an about 11-year bull market in the stock market. We've been in like in a 25-year bull market in the bond market. So for that to change, I think that would take a lot more than just a new administration politically.
Agreed.
There's a lot of reasons beyond politics that affect interest rates, by the way.
And that's one of the reasons why I was this breakdown happened last week. And as you know, I don't consider last week's trading action very important. So I kind of wanted to see how it's doing now. And now it looks like it's it's
I'm long TLT and money lane. I'm long it.
Good. All right. Well, let's leave it at that. Jeff, this was a wonderful, wonderful session as usual. I always love talking to you. I always love getting insight from you. This is one of my favorite things to look forward to in the week.
Likewise. It helps me so much in my process.
Well, I appreciate you saying that. Folks at home, important. If you want Jeff to answer questions, give you feedbacks, bring up topics, if you want to say hi to him, he doesn't bite, I promise. Reach out, jeff@joyofthetrade.com. That's jeff@joyofthetrade.com. And if you want to reach out to me for any reason at all, you like my shirt, you don't like what I have to say.
I like that shirt. Well, I like the button down look. It's professional. It's good.
Thank you. So, whatever the reason is, folks, I have a thick skin. Reach out to me. Let me know. Good, bad, ugly. It doesn't matter. support@marketgeeks.com. It's an old email. I still use it. I've been using it for years. That's how things get to me very fast. That's jeff@joyofthetrade.com or support@marketgeeks.com. And on that note, we both wish you a wonderful, wonderful day. Jeff, thank you once again. Bye, everyone.
Thanks, Roger. See you guys next week. Bye-bye.
Bye, you too.